bino kambijjeko. Okay, so let's do the replay. So Bob, Kati, what we're going to see today is how to find daily bias. Otegedde tugenda laba engeri gye tufunamu bias ey'olunaku, and with bias tuba tulina okukozesa liquidity. Otegedde tuba tulina okukozesa liquidity then ne points of interest. So we are going to look at liquidity, then ne points of interest, POI, POIs. So these are the things we are going to look at today. So first of all, when kugamba liquidity, what do you understand? Hmm? Liquidity. You have never heard of the word liquidity? So we're talking about liquidity. Like the most simple understanding is like where the money is. Sente ziliwa. Where are the position? We know that when the market is moving, let's say the market is in an uptrend, to continue in an uptrend like this, why not kubaho liquidity a pushing at the market? Because these moves need money to continue. So Chechurachi Otero Lava, like when the market is moving like that, it forms these moves, then ne buying. Kati wano. Olaba this move here. Some people were selling when they saw that there was something like this here. They sell. When they sell, kati eno waggulu baleseeyo liquidity. Jjukira bw'oseeringira wano, stop loss zo ziba wano waggulu, ziba above here. Okitegedde? Then so something like this can get short position. So when they see that the market has done this, they will sell here. Nga baagala market ekole ki? Eseeringe, then stop loss zaabwe ne baziteeka wano waggulu. So that's why you always see market, it gives them some little profits, then neddayo nekoona stop loss zaabwe wano because it was moving. So kino wano, this here, what has happened here? Kandeke ku dotted line. What has happened here? Okay, what has happened here is called, now this is what we call a liquidity grab that has like esoka nekola as if it's going to sell, then ne buying and never stop losses out. So if you are using liquidity to trade, for you will know that the market is still bullish. So for you, you'll be looking for something like this. You'll be looking for market to take out this liquidity. Then you enter for buys like that. Your stop loss will be below like that. So that's the importance of liquidity. Liquidity helps us to know where we can enter the markets from after liquidity has been grabbed. But what to manage concept here liquidity, that's why you always be stopped out from nowhere. So it's not enough. Okay. So that's liquidity. So njagala tudde ku charts then tufune liquidity. Then for points of interest, you know what a point of interest is. So when we are in a bullish market, we have points of interest. So this one in here, points of interest is even these supply and demand zones. These are demand zones when you are bullish. A point of interest, our overall point of interest. Then when we are moving, we shall see other points of interest. Like around here, to Sangaho points of interest, where we are anticipating for the market to come, the market to retrace down, then we buy from there. So those are points of interest. And for points of interest, we have basically the ones that we care about when you're trading this strategy. We care about mainly like three. One of them is the order block. We have order blocks. Then the other one is the fair value gap. Nakuyigiriza engeri y'okusanga fair value gaps n'oza ojjukira. Fair value gap. Then the other one is called the breaker blocks. The breaker broke. So these are the points of interest ze tukozesa. So in nakugamba, in this strategy, what we do when we are trading, we we start with the daily time frame because we are doing what we call day trading. Day trading, we always start from the daily time frame. We are not interested in what is happening on the 1 minute. We are not interested in what is happening on the one year chart. Those ones we don't care. We care about what's happening on the daily. Then we get a bias for the day, how we shall trade for the day. So when we shall start with the daily time frame, daily time frame, we get the daily bias. Again, toward bias. Can take him red. So daily time frame again to a bias. Then today ku 1 hour, we shall go to the 1 hour time frame. 1 hour, the 1 hour, the 1 hour time frame will give us the context of the markets. Context kitegeeza like what's happening, what's happening at that time. Onfuna. So the the 1 hour will give us our context. Then we shall go to the 15 minute. 15 minute. No, 15 minute. 15 minute. Again, tour the the entries. So we shall get the entries from here. The entries. Entries. So this is how the strategy works. So we start on the daily time frame, we get the bias, we got the 1 hour, we see the context of the market. Then we shall got the 15 minute to enter the trades. So that's it. So let's start with an example here. So Tulaba, that our market here was in a consolidation. Ojiraba, this is a consolidation. We are seeing market moving sideways. Then, mhm. Then there was this sell off. Then we started buying again. So we have points of interest in this picture. We have this fair value gap here. Olava, there is a fair value gap there. Mhm. So when we mark that fair value gap, we want to see what will happen when price taps into that fair value gap. Katulabe. Mhm. We are seeing that there was price ya tapping mu fair value gap yaffe n'ekola rejection. Let's see how that day will close. So we see that that day, what happened on that day, price tapped into the fair value gap and crossed above. So it showed a rejection. So tetulina okukola kati tugenda ku gundi yaffe, the 1 hour, the 1 hour. Kati olaba, this is our 1 hour. Kati on our 1 hour time frame, we see this is the move. We pressed up into this and started rejecting. So what we shall do, we shall look for reactions. So we see this reaction, we see there is a change in state of delivery here. Eno, eno gye marking wano bagiyita state in change of delivery. So what is a change in state of delivery? Change in state of delivery is whereby we have a point of interest. Yaffe. Katogether, it's a fair value gap. Then when price is approaching our point of interest, we are coming like this. We are making these higher, lower lows and lower highs like this. We tap into the point of interest, then we get something like this. Then we now know that we have changed direction. We are going to start buying. So, so one here, that's that's where we have our Wantadeka green line. That's where we have our change in state of delivery. So we have changed from delivering bearish moves. We are now starting to deliver bullish moves. So Ojalaba likes in other strategies, they call it market structure shift. They call it change in they call it choke, change of character. So you shouldn't be confused. Just know that as long as we are changing from delivering bearish to delivering bullish, then that's it. That's change instead of delivery, market structure shift, short, then change instead of delivery. Yeah. So at one on our chart, I want us to see if we have it. Where is it? It has disappeared. Let me go to the one there. Mm-hmm. Our This was our fair value gap. Sitio. like this. So tugenda ku 1 hour. Okay, so I think we shall continue here, then we shall continue the basics some other day. So we are on the daily time frame and we have drawn our point of interest, which is our fair value gap. Let me put in fair FVG. So if you see FVG, then that's fair value gap. Fair value gap is whereby we have where a candlestick forms. Let's say this is our candlestick. Remember, it has a body and a wick. This is a wick, and this is also another wick. So in to find the fair value gap, we have to be having three candles. Let's say we are bullish, and these are bullish candles. So we have another bullish candle that opens from here. It goes down, then it goes up and closes like this. So it also has a wick because it first moved down and moved up. Then we also have another wick up here. So these are two candles. Then the next one will open from here, obviously. It will open from here. It first goes down, maybe then closes up like this. So we shall have another week here. So to find the fair value gap, we shall use our box here to draw from the week of this current candle, the week of the third candle, like this. So this this area here in between is our, let me fill it with green. Yeah. So this green area is our fair value gap because if you see there were no sellers inside this box because the 1 week is here. If this week was up to here, then we would have no fair value gap because we would have this small one down here. But if the week is up to here, then the fair value gap will be up to that area like that. So this is a point of interest where we look for entries because we know that there are many buyers here without sellers. So that's the idea of the what of the fair value gap. So if we draw our fair value gap, we see it's from here to here. So from there to there, we shall go to the lower time frame. This is the daily time frame. So every candlestick represents what happens in a whole day. So we shall go to the lower time frame, which is the 1 hour. So when we go to the 1 hour, we are looking for a change in state of delivery. So we see we had a downtrend. Let me draw the downtrend so that you can see it. We had this move here. Then we started moving bearish. There was a whatever bearish. Mhm. So we have started now going back bullish. So there was whatever. The charts are not always like very neat, but you can see those moves as they happen. So that's our chart. So if we are to draw our change in state of delivery, we see we were moving down, we started moving up. So let's mark our change in state of delivery here with blue. So right now we are seeing that market is bullish. Let's go to the 15 minutes to see if we can get an entry where we can sell or buy. Yo, Nick, if Are we looking for sales now or buys? If you can see the condition of the market. So we are looking for buying scenarios. So let's see what can happen. So we see we have another area here. So now, do you know how to use Fibonacci retracement? If we are to use Fibonacci, this is our Fibonacci retracement. We look for a low and a high. So if we are to mark here, we see that we have this high. Let me remove it. If we mark this high and a low here, this is Fibonacci retracement. So we see the 50% is here. Ojiraba, this is our 50%. Let me remove some of the lines so that it becomes clear, the coordinates. I want to remove the other so that we leave the 50%, 50, 0, 1. Uh-huh. You see this one? This one is very clear. This upper one is the premium zone, then the lower one is the discount zone. So in the discount zone, so in the discount zone, we shall be looking for buys. Then in the premium zone, we are looking for sales. So if we are to see here, we have we are looking for areas where we can buy from. This is the discount. So if we buy from that discount, if we buy from that discount, we are going to be targeting. Right? We shall long we shall long from here. Then our stop loss will be down here. Ochiraba. Then our targets to tukozesa daily time frame to see what to see liquidity targets where we are targeting. So if we enter from there, target yaffe egenda beerawa. Let me put this line. We shall be targeting this high first. We shall be targeting this high first. Then we shall also be targeting these highs. So bwe tuddayo ku 1 hour, so olaba targets zaffe. If we buy from there, then we shall be targeting those areas. Yeah. So katulabe what could have happened on that day. Katulabe kano we be like tugenda buying one we buy. Stop loss take one wansi. then TP, take TP1. Uh, eh, head. Zero. Buy. Stop loss down, take profit here. So I don't know what would have happened on that day. Mhm. That would happen. Put one out. Mhm. Okirabe ekyatuukawo on that day, we bought from here ntugenda mu profits. Target yaffe ebadde wano olaba, we reached almost TP, then nekola ki, ne 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 selling and hitting a stop loss here. If we go on the daily, no, what's happening here? On the daily, you see it first bought, then it sold. Why did it do that? Olaba wano wansi buno obuliwo bubiri busatu, these ones here, these are news. Waliwo CPI on that day, waliwo CPI. So that's why they say if you're trading and news are coming, we use Forex Factory to see the news that are there on that day. If we have news like CPI, NFP, make sure that by the kale bw'oba oyagala sigala mu trade, olaba twali mu profits one. If you want to remain in the trade, if you're in profits, bring your stop loss or you take a one to break woyingiridde awo, so that if news go against you, okole ki, oveemu nga you have not lost anything. Ekyo kye bayita moving your stop loss to break even. So that's what happened. News zaafuluma nga ziri against our bias, ne zihitinga stop loss yaffe. Naye if this is your take profit wano, price bw'etuuka wano, if you're on the charts you can cross, osobola ozigalawo n'ogamba one pip is not worth it to wait to hit tip, n'ogiclosinga. Kati katunoonyeyo trade endala. So we go back to the daily. Let's go back to the daily time frame. We look for another trade. Mhm. Mhm. Olaba what happened? The news zaatujjamu naye bias yaffe yali correct. Ndowooza olaba, zaatujjamu then ne zihitinga take profit zaffe zonna bbiri. So bw'olaba nga ku charts zo kuliko kano akantu wansi ne wano, olaba wano nawo weekali, ekitegeeza on that day wajja kubeerawo news, so you have to be vigilant and know what's happening in the market. So tugenda kufunayo trade, tunonyeyo trade endala. Jjukira we go through three steps. We go on the daily, we go to the 1 hour, then we go to the 15 minutes, ne tunoonya entries. So that's what happened. Tulabe kando engeri gyegenda okulozingamu. Mhm, mhm. So we see kye tulaba wano, okiraba, we see that we have pushed up, going above all these lows, all these highs, netukola zino highs ndowooza oziraba. So we pushed above all those, we pushed above all these, then closing up back inside. So this one we can tusobola ogiyita gundi liquidity grab, liquidity grab. Why do you call it a liquidity grab? Olaba lwaki tugiyita liquidity grab? Olaba wano waliwo people who sold, kankulanye. So wano kweno high waliwo abaseringa awo ne bagiseringa market ne bagitwala wansi, sellers, okiraba awo. Then ne wano waliwo people who were selling nga bagisuubira okuddayo wansi, okiraba. Naye nga stop loss zaabwe zibeera wano waggulu. Kati those stop losses ezibeera awo waggulu ze zipushinga this market to push up, olaba this volatile push, then nebajjamu, they hit their stop losses before we continue going down, because that's fuel. The liquidity ebeera like fuel to push the market. So wano bwe tulaba this liquidity grab, we are expecting market to do what? To sell, to start selling. So bias yange kati ebeera sales ng'anoonya ki? Market okuseeringa. So this is the daily time frame. We go to the 1 hour. When we go to the 1 hour, kikyolaba ku 1 hour, we see that market pushed, then neekomawo munda. So we mark this one here, this zone here, eno area, eyo area tugimarkinga, and we wait for price to do what? To come back and cross above that zone. Network change in state of delivery, we're closing up there. They just to change in state of delivery. So that's what we are waiting for. So that we get something like this. Market jukira yabadde buying bweti, yabadde buying, then kati twagala ekole kimu ekyuke, then tutandika oseeringa. It will confirmations that we are now going to start looking for sales. So kano akali wano ye change in state of delivery gye tuswamye, this one here. So let's see what happened if we got it. Olaba ndowooza okiraba that market did what? It pushed below network that change in state of delivery. So after that change in state of delivery, we shall be looking for where we can enter the market from. So we would have entered naye wano tulinawo gundi, we have this fair value gap, then bwe tukozesa Fibonacci yaffe and we draw it from this high to this low, we shall see that we want it to come back into the discount zone, because tetusobola seeringira wano because it's still the budget hour to the discount zone, and selling we sell in premium. Kati tulabe ekigenda okutuukawo. Mhm. Mhm. Kati tulaba that the market yakoze eki? We have this liquidity sweep wano, ogiraba eyo liquidity sweep because candle yaswipinze ne closing inside. So bwetudda ku gundi ku daily time frame okufuna bazita our targets, we shall be targeting at least this low as liquidity. So let's see if we shall get a trade in the 15 minutes. Katulabe what tusobola okufuna trade. Ku 15 minutes olaba tulina fair value gap yaffe wano eri mitigated. So let's try selling here and we put our stop loss above here. We target 1 is to 2, 1 is to 2. We sell stop loss above and we see we put TP here. Then tulabe ekigenda ovaamu eyo ye trade yaffe ogirabye. Tukubye TP. So you have seen the process of getting a trade. Yeah. So kati tulina okukola is to get used connection kirabika wifi eri mu kulwavaako. So gwe tulina okukola, you have to get used to the market and have that experience of looking for trades starting from the daily time frame. You go to the 1 hour, you see what's happening, you get the context, you go to the 15 minute of day of May entries of the 15 minutes. So there was a practicing slowly by slowly, then where you get lost, I will be repeating again, then mpaka ngo ekintu okikute.